So many IPOs, right? We know they're a critical part of our growing economy, and yet there's going to be an upcoming flood of them potentially that could either help this market or maybe sink it. Here to discuss, Michael Pachter. He's at Wedbush Securities. And Michael, a lot of people really excited about the idea that some of these well-known companies in Silicon Valley, even some of the names have become household words, hitting the public markets just as technology stocks are starting to wane here a little bit. How do you see it?
I think that the right thing for all these companies to do is go public when they're profitable, and then their investors are going to get rewarded as they grow profits. I think the mistake that some of them make is they go public too soon, and that's what we saw with Snapchat. And I fear that's what we're going to see with Uber. I mean, my understanding is Uber is still burning a lot of cash, and regardless of the valuation we slap on them, if they keep burning cash for the first year or two after they go public, investors aren't going to like the story. I mean, the ones that work are the ones that are profitable.
Of course, and maybe it's an exception, Michael, but some would argue, well, then we wouldn't have had a chance as a public investor to get some Amazon, for instance. So are there exceptions to this rule?
Well, I mean, Amazon stock languished for the first 10 years. So the answer is, yeah, you're right. We wouldn't have had an opportunity to buy Amazon, but it really didn't start to move until the last 10 years once it was profitable. You could have bought Snapchat at 20 and you'd be sitting on it at 7 right now. You wouldn't be very happy. So I think profit is what matters. Cash flow is what matters. And companies that generate free cash flow and show cash flow growth tend to go up. Companies that burn cash tend to go down.
Planeteer making the rounds. It's a Peter Thiel company. Today, one of the hottest stocks in the market is PayPal. Just a reminder that Peter Thiel has the magic touch. Would you be okay with that going public? Would a name like that be the one that can perhaps spark some life into NASDAQ?
Yeah, I think that probably is the one. I haven't seen their financials. They'll obviously have to file before they go public, but they appear to be profitable. They appear to be growing nicely. They're in a really interesting enterprise niche, and I think I think somebody who's in the data business is going to do really well. Somebody who's in the people moving business like Uber is going to have a little more trouble.
One of the things helping technology today, particularly early on out of the gate, was strong upgrades from your firm, Wedbush, on software names. Apple, now the highest target on Wall Street, $310. Microsoft, and a whole bunch of other names. I don't think you were the analyst on this particular call, but it was sort of I like the idea that Wedbush is coming out and saying, hey, we think these stocks are a buy. So you do see there are opportunities in technology.
I'm the pretty face of the firm. My colleague Dan Ives, who is clearly the brains of the operation, initiated on those stocks. He's been an analyst for over 20 years. He is super smart. If Dan says buy it, I think you should buy it. And Dan likes companies that work. Apple works. It totally makes sense.
It does work. We know that. But I guess from time to time, and this is one of those times, people question technology in general, right? And we did see semiconductor stocks fall apart. We've seen some of these household name tech names starting to fall apart. So overall, this current weakness in the market overall, but specifically to tech perhaps, is there a message there other than this is what happens from time to time?
Yeah, and I'm going to lecture you on something that I know you know more about than I do. Momentum stocks rip when they're going up, and they drop fast when they're going down. GARP, growth at reasonable price are the things that tend to work. So Facebook is growth at reasonable price. Apple, Microsoft, growth at reasonable price. It's hard to sustain, the kind of moves we've seen in some of these high flyers, and they're really crashing down.
All right. Michael Pachter, thank you very much. Great stuff. Always appreciate it.